This is a competitive marketplace. Everybody's trying to get an edge. It doesn't matter what business you're in. It's about getting ahead and making money and whatever that takes, right? So, of course, there's always going to be some bad people, I think, in any industry, and maybe some incentives and misalignment. I think that's what we're going to talk about. But sure, of course it's okay to get an edge. This is a capitalist society, is it not? I mean, that's what we do.
So I think that raises perhaps the most important question of all when it comes to cheating or not on Wall Street, Dan. Is it impossible to get the incentives right in the financial services industry? You try, but the people who are motivated by money will always find another way.
So I think it's actually important to ask what are people's real incentives, and are people trying to do everything that is terrible? And the result is that people are nice.
I'm inclined to believe yes, but
well, but here's the question. You can ask yourself all kinds of questions about your potential of cheating and not getting away with it. I mean, there's lots of things you could do. I mean, we have been here in the studio for a while. We could have taken some stuff home, right? I mean, I didn't see you take anything. I actually looked.
I took some water, but that was it.
That's it. I mean, if you think about the potential we have to steal every day, you go to a restaurant. It turns out I've been doing this for a while. Every time I go to a restaurant,
stealing
I ask them,
cutlery?
No, oh, yeah, that's a good direction. But I asked them, is it possible? Is it easy to eat in this restaurant and escape without paying? And they always give me good advice. You know, you just wait for a big party to come in. There's a bathroom. There's an alley. There are lots of ways to do it, but almost nobody is doing it. If you look at people, we are often good. We behave well, right? We have moral. We have consciousness. The thing is that we cheat. Not because of being afraid of being caught. We cheat when we can rationalize our behavior as being good. And I think what the market is doing in many cases, like I'm guessing that you teach your kids, for example, you know, other people's kids to be nice people, right? To give.
Sure, and maybe I'm naive, but I mean, I think people are inherently good, and I think that carries over into the financial markets as well. I think the vast majority of people in these markets are good people that are trying to make a living, that are supporting their families, that have good ideas, they enjoy what they do, and they're trying to figure out how to do a better job of doing it.
That's right. But the moment you give them a theory about why what they're doing is actually okay, all of a sudden they can behave better. And I'll give you an example. We made some people a CEO of a fictitious bank. And they were making money on a computer simulation, but they were getting real pay. And at some point, their bank was not doing very well. And then we came to them and we said, look, there's all these things called revenue enhancements. Do you know these things? Like, these are kind of, I don't know what's polite to say on TV, but these are kind of ways to really mistreat your customers but get a little extra income from it. And the question is, which of those do you want to adopt and which not? And some people were told that your goal of your bank is to maximize shareholder value. And all of a sudden, these people were much more willing to take, basically, to screw their customers, right? And I think that's what happened. At the moment you say, everybody else is doing it, and my obligation is to my shareholder, and I need to do everything to maximize revenue, all of a sudden you could do things that you wouldn't find moral outside of that system. But the system makes you think that this is actually okay.
Exactly. Didn't you have a front row seat to this? No, but quite honestly, when Stephanie worked at Deutsche Bank, right, she was in the financial services industry and Credit Suisse before that, and people were creating CDOs and CDOs squared, and they were, as we know now, weapons of financial mass destruction.
And people didn't believe.
But they thought that they were actually good products.
People thought they were good products, but they also didn't believe they were doing something bad because they were amongst a sea of other people practicing the same thing. It wasn't like they were picking up a computer and walking out the door with it and no one else was. Everybody was doing it.
Certainly, they're helping investors to make money, and there's a lot of different ways to do that. And look, I think we're safer today in the markets. Retail and institutional investors are safer today in the markets than they've ever been. If you think back to the 80s and we had, you know, the floor of the exchange, sort of the good old-fashioned way, spreads were much, much wider. There was a much larger information sort of difference between what the retail guy was seeing and what the guys on the floor were seeing. Today,
asymmetry.
Right, we're all online. We've all got, you know, real-time data to our desktops. You know what the price of the stock is to the penny. You can trade electronically for a penny or less a share today. It's dramatically better than it was in the past.
By the way, I think we need to separate what's fair and unfair from what's cheating and not cheating. I mean, you could say what's about gaining an advantage. You could say, oh, if somebody has more money and they can build an office closer to the exchange and have slightly, is this really fair? And by the way, it's kind of interesting to think about free markets, because I did not grow up in the U.S., but the U.S. has this kind of split life. When we think about the stock market, we say it's all free and it's all capitalism and so on. But then we have sports. And in sports, and I'm not a real expert in sport, it's really like so regulated, it's unbelievable. If you took what's going on in sports and you say, let's do the same thing in capitalistic system, right? If a company wants to hire a CEO, we let the good company only hire the bad CEOs. I mean, think about all the structure that we make in the name of competition. Like sports is about competition, but we create such incredible structure because we don't believe in sports that free markets are going to solve everything. But then in the financial markets, we somehow believe that. It's an interesting contrast.
But in the financial markets, do we look to blame the system when the market goes against us? We love to say that derivatives are weapons of mass destruction. Maybe stocks are weapons of mass destruction when the market moves against you.
Yeah, I mean, I really don't like the use of the word fair when we talk about capital markets, or really industry in general. It's not about being fair, right? It is capitalism, right? So as long as we're all following the rules and we know what the rules are, everybody's in the business to...
Hold on a second.
But we also know about lobbying, for example. You know, to say we all know the rules basically means that the rules are kind of created magically in a fair way. But what if you could create the rules? Would you also agree that now the rules are fair because you created them and the person who has the most money can create the rule that serves them the best?
Look, it's not fair that my neighbor's lawn looks better than my lawn looks, right?
No,
but it's not your neighbor. If JPMorgan and the founder of Citadel and the founder of Blue Mountain get to sit on an ISDA committee and my mom and dad don't, it ain't fair.
Professionals are always going to have an information advantage over non-professionals in any market. You understand the journalism business much better than I do. That's what you do for a living, right? So the CEO of Citadel is going to understand the derivatives market better than your mom and your dad
And he's going to work the system to his own advantage when he meets with Washington.
But that's assuming that people are inherently bad, and I don't think that's true.
No, I don't think it's not assuming people are bad. It's assuming people have the ability to be biased. Actually, if you think about lobbying in general, lobbying is basically about my ability to buy you a sandwich and beer, and from that moment on for you to look at life from my perspective, right? People are not expensive. You could buy people very, very cheaply. And by the way, it's a very nice thing, right? Because it means that you could have a simple interaction with somebody and all of a sudden they like you better. In the social realm, it's really wonderful.
Is that to say that lobbying is just institutionalized bribery?
I think it is, but it's in an interesting way because people don't see themselves being bought, right? So if I paid you a bribe, you and I would know that some money passed through it, and you would somehow recognize that. But in lobbying case, as with some other incentives in the financial markets, people don't see themselves being influenced. So here's the trick: when somebody starts lobbying you and you say, do I really look at life from their perspective because I'm being bribed? No, you don't see that. And because of that, it's actually a bit more toxic even in terms of its influence.
But so we talk about the banks and lobbying. The flip side is there are also asset managers and corporations and pension funds that are down in Washington lobbying as well. And they're lobbying for their investors, right? And that's your mom and dad. So I think there is a voice.
There is a voice.
Does the way Washington work make sense anymore? That's a whole nother.
The statement you made was that the moment the rules are set, everything is moral. And I just want you to recognize the fact that it's true if you did not have any key role to play in how the rules are being set. So, right, if you and I play Monopoly and I decide what the rules are, you can't possibly say that Monopoly is fair because of that. So I think it is an interesting question of at what level do you look at yourself as being fair. And by the way, you're in this business, right? You cannot possibly see life being outside of your perspective, right? I don't think you're lying. I think you just, or even have any bad intentions. But I think you are in that world, and you basically see the world from this perspective. And it's really hard for you to see it from a different perspective.
And I appreciate that, right? The complexity in these markets is over the top. It's amazing, and I wouldn't expect the retail investor to understand some of the intricacies, and largely they shouldn't. You would hope that they would have an investment advisor or a broker that's going to steer them in the right direction and help them to make those choices to get the returns that they need. And those incentives, I think, are aligned.
Should we talk about the financial incentives for investment advisors? Is that where we want to go?